Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Will Meadon, manager of the JPMorgan Claverhouse Trust. Hello.
Hello.
So UK equities is your bag, but it's not everybody's at the moment. I mean, foreign investors are not very keen on UK equities. Why is this, and are their fears founded or unfounded?
You're right, Emma, that UK equities are pretty unloved at the moment. And to some extent that's understandable. The politics has been very uncertain. You know, the snap election that was called by Theresa May, where the result went a way that not many expected. Clearly, Brexit is overhanging, but those skies will clear in some form in the next 12 or so months. But I think the mistake investors are making is, if they're neglecting UK stock market completely, is that the UK stock market is not the UK economy. If you look at, for example, the top 100 companies, the FTSE 100 companies, roughly 70% of their earnings come from overseas. So effectively, if you buy the FTSE, you're buying world equities, and now, as you say, you're buying it on a knockdown rating. I mean, the prospective yield on UK equities is more than 4%. Which is the highest of any developed stock market around the world. So there is some bad news or some uncertainty around in terms of politics, but that is, I think, more than reflected in the price, and we can come on to talk about the underlying fundamentals, I think, are still reasonably good for UK PLC.
Because the market, the FTSE 100, did fall significantly from the beginning of the year down to sort of, I think the low was March the 27th, but it has come up again since then. So are people sort of being overly pessimistic and just taking that snapshot and failing to recognise that actually, as you say, the fundamentals are strong? Yes,
you're right, but it isn't just the UK stock market that's been volatile this year. The world equities sold off for a number of reasons at the start of the year, not least of which there were some very substantial profits to take from the year before. But UK equities did bounce very strongly in April. I think the market was up roughly 6%, and again, it was one of the best performing markets, if not the best performing market in that month. So there's a lot of volatility, but I think as professional and indeed private investors, we ought to try and look through that and take a view of whether equities, in this case UK equities, are good value on a medium-term view, and I think they are. That's why my investment trust, Claverhouse Investment Trust, is geared. And the UK stock market now is roughly the level it was at the start of the year. But meantime, you're getting this very good yield along the way, so you're being paid to wait.
And what is it about the fundamentals that you continue to think, or the valuation that you continue to think is compelling?
Well, it varies from company to company, but on average, if you look at the reporting season that's taking place at the moment, companies on average are beating analysts' expectations. So current trading, it varies from company to company, is going generally pretty well. Balance sheets are in a pretty good shape. Average debt has come down for UK PLC each of the last 3 years. You're getting a very good dividend along the way as well from a lot of companies, some of them paying special dividends. So I think that combination makes UK equities quite attractive in these circumstances. But investors have to learn with accepting some volatility, which they didn't have the year before. It was a very easy ride in 2017.
And finally, how much does currency play into this? Because a lot of the returns in 2017 from UK equities were driven by lower sterling, ever since the Brexit vote, really. But sterling has started to come up a bit. Is that going to impact the FTSE too much?
The currency was quite strong. Sterling currency was quite strong at the start of the year. It was partly a function of dollar weakness. But in fact, the last 4 or 5 weeks, the sterling has started to weaken again. So it's now sort of 136 against the dollar, having been 143, 144. And look what happened when the currency weakened. The stock market went up because of the translation of those overseas earnings and some dividends paid in dollars. So the currency is important, but I don't think our investment stance should be predicated on where the currency is going. We don't, in Claverhouse Investment Trust, try and predict where sterling is going, although I do think at this level it's pretty competitive.
William, thank you very much.
Pleasure.
This is Emma Wall for Morningstar. Thank you for watching.